Hello, everyone. I'm Andy Wong. Welcome to the Australian Life Investment Channel. In this episode, we will talk about one of the major events that has caught the attention of the international financial circle recently, which is the new round of tariffs imposed by the United States. These measures specifically target many different manufacturers, and additional tariffs have been levied on import and export goods. Although this policy is still in a brewing stage, because in the coming week, many different economies such as China, the EU, and even other related countries may respond. So moving forward, this will become a focal point in the market. But I think during this period, as Australian investors, we should actually pay attention to the potential impacts and influences of these macro policies, because it not only affects the pace of global trade, but may also have a chain effect on our usual investment portfolios. So, if you are concerned about your investment portfolio or some retirement portfolios, remember to pay attention to the educational content we are sharing in this episode. As with previous episodes, this educational content does not contain any investment advice, but there is one suggestion. Remember to subscribe to this YouTube channel, like this video, and share it with your friends. Of course, if you have any questions, feel free to leave a comment. Also, if you want to make an appointment, you can click the link below to schedule a session with us for some sharing. On April 2nd, US time, which is early April 3rd in Australia, Donald Trump, during a press conference, mentioned the names of many countries that you can see on the screen. He was actually discussing the different countries targeted by the reciprocal tariffs they are implementing, and the percentage they intend to impose on these tariffs. You can quickly see, for example, that there are also clear tariff policies in place for China and some countries related to its manufacturing supply chain, such as those in ASEAN. Although we know this chart is still a final result, as we need to pay attention to how different countries will react to this set of policies in the coming week. This will continue to affect the global market trade situation, thereby impacting the overall economic condition. Of course, here in Australia, the impact is relatively smaller, so the government has used its own approach to address the risk of US tariffs. However, they might also provide subsidies to support local related businesses. Regardless, we see many economic aspects with a lot of uncertainties surfacing in the short term. But as investors, are we ready to deal with market volatility now? First, we need to understand that although Australia is a market driven by domestic demand and resource exports, there are many other important industries within it. Of course, resources like coal, iron ore, and timber are important, but other export manufacturing sectors and even businesses related to the supply chain are heavily reliant on supply chains and external demand. Therefore, we need to pay attention to the potential impacts of this tariff issue from two perspectives. One is the economic aspect, and the other is the stock market aspect. For example, from an economic perspective, global growth seems to have potential risks. That is to say, under these tariffs, there is a chance that countries with relatively fragile systems, particularly those heavily reliant on export manufacturing, might be the first to experience an economic slowdown or even enter a recession. Then, of course, we need to gradually observe whether the entire world will slowly enter a pattern of economic slowdown. This is something we need to examine step by step from an economic perspective. Additionally, regarding resource prices, when demand decreases, will they first drop and then rise, as this could also create an inflationary scenario. So, it's not necessarily a definite sign of decline, which means that during this period, different resource prices may react differently. However, when it comes to the stock market, we sometimes need to look at it through a different lens, because the stock market reflects the situation of companies, specifically their profits, which may not be entirely related to the economy. Yes, For example, we might see that, of course, as mentioned earlier, resource exporters might experience pressure or benefit in their profits due to a slowdown in demand or fluctuations in commodity prices. We need to pay attention to these fluctuations. On the other hand, in the short term, even though the market sentiment might seem very poor, some rational investors might consider this an opportunity to shift towards defensive sectors and domestically driven companies. These companies are more related to internal demand and may not be directly affected by external trade policies. In such a turbulent period, these might actually be relatively stable. As many investors often mention, in the investment market, there are opportunities in different environments. Because of this, whether you are using a regular investment securities account or even for your retirement as some form of security like superannuation or what we call an SMSF account, I actually think now might be a good time to reassess your portfolio allocations. Because do you have too many stocks or too few stocks? Too many bonds? Or perhaps you don't really understand the advantages of bonds? Or during this period with commodity prices, as we have shared before, we've seen, for example, the price of gold has risen significantly. So do you have an investment portfolio? In the past, people might have felt that focusing on just one type of asset was sufficient. But during this period, could a diversified asset allocation help everyone navigate through this time of market uncertainty more steadily? So remember, no matter what perspective you're using to view your investment account or retirement account, it's worth reassessing whether your global allocation is adequate. In terms of global asset allocation, we actually refer to it as assets allocation. Traditionally, many times you often hear a lot from media programs that focus on grabbing attention, so they often talk about stocks. However, from an assets allocation perspective, we should actually consider having stocks, bonds, alternative investments, which might include real estate, gold, or even different forms of cash or foreign exchange to ensure that your asset allocation portfolio is highly diversified. It's also what we often say, don't put everything in one basket. We need to make some diversified investments. Even when we're talking about the same type of asset like stocks, Australian investors might become home buyers, preferring to buy only Australian-related stocks or bonds. However, from an asset allocation perspective, sometimes we need to look a bit further. Are there other opportunities for stocks or bonds globally? This is one of the situations we often pay attention to in global asset allocation. Why would we want to do this? In essence, simply put, it's to achieve a somewhat more balanced pattern of risk and return, and to make an allocation that carefully and thoughtfully suits each investor's acceptable risk range.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me.
Just like many investors have home buyers in their own main areas, for example, Hong Kong investors traditionally like to speculate in Hong Kong stocks. As for Australian investors, I have noticed that many times they tend to focus more on local large enterprises or a lot of real estate related information. This might lead to overlooking many different opportunities. Previously, I have shared that if you are already doing some asset allocation, there might still be different investment methods worth exploring, and even some pitfalls to be aware of. I will place the link below this episode's content for everyone to refer to. All right, some investors might think, oh, there are many different ways to invest in asset allocation. I believe that with the convenience of market trading, such as what we call ETFs, which are exchange-traded funds, this can greatly assist in various ways in implementing diversified asset allocation tools and strategies. In my usual interviews with different media in Hong Kong, Singapore, or Australia, and other regions, I frequently engage in discussions regarding tools listed in the US or Hong Kong. However, in Australia, the ETF market over the past few years has been quite noteworthy to me, because I've noticed that the ETF market here in Australia has been developing rapidly. You can find these exchange-traded tools on the ASX website, referred to as ETPs. There are many different investment areas within them that can serve as a reference for everyone. For example, there are large cap stocks, mid cap and small cap stocks, different sectors, and even emerging markets in Asia. It's all laid out for everyone to see, revealing that there are so many types to choose from. This is exactly what we mentioned earlier about needing a variety of asset tools for asset allocation. Now, let me give a small example. If you want to achieve asset allocation within the ETFs listed in Australia, let's use stocks as an example. This is because, as you may know, stocks are a type of asset class that tends to pursue growth. For example, aside from seeing this list, I've only clipped a portion of it, so it's not the entire table. But you can see that there are Australian stocks, and actually, within the Australian ETF market, you can also access many global stocks. And when it comes to stocks, do you have to buy from just one country? Actually, no, you can even choose different sectors or even different investment themes. For example, if some investors prefer a more defensive approach, aiming for more stability in their investment portfolio and focusing more on income-generating types, besides the often mentioned high dividend stocks, bond ETFs, might also be worth considering. Bonds are primarily income-focused and are considered a relatively defensive asset. Here we have a list for everyone to see that besides Australian fixed income, which refers to bond ETFs, there are actually many options for global fixed income ETFs as well. In this episode, I'm just providing an overview of the many different ETFs available. If you have any questions about tools related to certain assets, feel free to leave a comment and let me know, and I'll see how I can follow up with you. Additionally, within those other ETF practical tools, there are also options that we can consider as alternative investments. This list includes commodities, and there might also be some related to real estate. As for commodities, well, you've all seen our previous episode about gold, right? In fact, even within real estate, there are mentions of various, related ETFs that could be considered for your asset allocation. Because I believe that as long as you make good use of ETFs, or even if you don't understand them initially, you can seek experts to help you create your own general investment portfolio. Even platforms like Super and SMSF can make good use of these exchange-traded tools to aim for a portfolio that enhances growth potential, and long-term investments can still capture opportunities here. In fact, the short term is still filled with many uncertainties and various news reports. However, I believe that as a long-term investor, one would understand that market volatility is part of investing. Most importantly, I believe it's crucial for everyone to know whether the investment strategy they are using, or their current retirement plan, aligns with their goals and the level of risk they can tolerate. Therefore, everyone should learn more about their own risk tolerance and understand how to effectively utilize different investment tools, such as ETFs, to build a diversified asset allocation. Of course, you can also schedule a one-on-one consultation with professionals. For example, you can use the link below to schedule a time with me for a meeting where we can share some insights. Additionally, in the coming days, I believe we will continue to focus on how various countries respond to the US and what reactions the US will have. For now, this is all I have to share today. In the future, I will continue to keep everyone updated on the market situation. Thank you all very much.
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, Before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.